Good, everybody. Still here. Daily Market Pulse. Thursday, September 25th. Just when you thought the stocks were stabilizing, finding support with good bullish candles, boom. Uh, Lows were lost. Support levels lost. New support levels are being looked for at the moment. So mixed volume. However, Nasdaq drops about 1% or so on high volume, adding another distribution day. S&P remains at 3 for the time being. Everything's still below the 8 moving average, and we're still looking for the possibility of a big flush. Put call ratio is at 1.01 or right at 1 right now. If I remember, I'll show you that chart. So that is what it looked like yesterday. This is what it looks like today. Big red candle back to 17,000. We said that would be the support area. That's 16,945. In fact, at the 50-day moving average and holding. It could hold here. It could also slice through aggressively, come right back. You can see it's oversold as well, so it could come back real quickly because it's still kind of flag-like, and the volume has been mixed. It's not been all ugly selling, so it could still be ugly selling and then reverse, or it could just bounce again. It's hard to say, but right now it's still, I'd say, more downside pressure at the moment than there is upside pressure for now. So the Dow looks like that. The S&P looks very similar. Bottom of the channel, 1965. Right there, it could slice through briefly and come back. It is oversold here as well. Look for the possibility of a bounce and the bulls recovering this thing. If not, then you're looking way lower. Nasdaq, as I said, 1% or more, 1.1% I believe, slicing through the support area of 4,500. Now looking for 4,400, and possibly down into the 4,350 area even. It is oversold, at least attempting to, at least getting to that point now. TSX slicing after the doji yesterday through the Bollinger Band into the next level. Room to the 200 at this point because it's below everything, below the 20, the 8, the 50, everything. It's weird. I mean, this thing just took off hard. It never got back to the top of the channel. That was probably our first clue. And then slicing to lower levels, but is overbought, looking for the possibility of a bounce here in the near future. U.S. dollar, Canadian dollar did come up. We had a shooting star yesterday. It did not come back lower. It actually went higher, matching pretty much yesterday's high, 111, and looking for possibly higher. 8 up is rising, 20 is rising. The 50 is about to cross over the 200, only adding strength to all the trends. Possible attempt to hold things here at this level right now, that lower shadow, almost hammer-like. We said that it would be kind of a now or never in terms of a possible crack and snap, and that's kind of what we're still seeing here. Treasuries did bounce off the 8, did bounce off 137, and bounce up and through and closed above the dark cloud cover from yesterday as well as the moving averages, so that can hold and keep going higher. Although this is kind of looking like a bearish J hook. So when it's bullish, you have this this move up, and then it consolidates, looking like a J, and then it comes back up again. Goes like that. Now this is looking at the same thing. It's coming down. It retraces, and it may want to go back down. So that's the challenge now. Is when these come off the lows, how high does it go, and for how far? Still thinking these moving averages may still have an issue in terms of their direction, how the market, this particular market moves, and if it has a chance to go any higher based on what we're seeing here. Japanese yen, wow, it tried to sell off again, but now bullish engulfing after sideways for 5 days. Looking like it's stabilizing, bullish or positive divergence on the stochastics, looking for higher levels now once again, and still on the Japanese yen. Same thing with gold, stabilizing near 1210, 1215, trying to bounce back into 1240 or higher. And silver, the same thing, down into the 1750 range and trying to hold here. It has another hammer that was formed earlier today. It's not showing now, but there was a hammer there that matches the other hammer from earlier in the week. Or I should say last Friday. And looking to bounce back toward 1850 to 19. Crude holding 91, bouncing, and just pretty much wedged in this little area. So you see the red trend line I drew there based on the highs. It's wedged at the 20, wedged at 93, and at the downside at 91. So there's going to be resolution here in the near future. Small caps, we know, were weaker, and that was probably our clue. The markets were not as strong as we thought they were. It sliced through quite aggressively, a lot of selling. Now attempting to hold 110. Yesterday it looked decent, but it actually made a new low today. But we're essentially retesting down here at the hammer low, and I'm going to put a line there because that's where we are right now, right at 110. 110. If not, then you're looking at lower again, looking at 109 to 108. And that could happen, a quick slice flush, and it could be anywhere from a counterattack to if it gaps lower in the open, to like a hammer-like formation or something of the sort. VIX, naturally, the market's down popping. We had the hanging man a couple days ago just below a resistance at 1550, dropped back to support levels, and the lower window at 13 then immediately gapped higher, forming this bull sash. And right on through 15, 1550 into 16, and then they're tagging the next upper limit of 1650 to 17, as I mentioned. This could go higher. Markets could gap lower, and then everything reverse. This could hit higher and reverse. Lower, higher than 17 would be, of course, into the 1850-19 range, but right now we're looking at 17 first and foremost for the VIX.